Is Lumen Technology a buy or a sell? Let's get started with the model. This is a mid-cap company, 9.7 billion market cap. They're trading at $9.59 a share, and they have 1 billion shares outstanding. Lumen provides telecom services to business and residential customers. It provides high-speed and low-speed broadband. They were formerly known as CenturyLink and changed their name to Lumen in 2020. Incorporated in 1968, headquartered in Monroe, Louisiana. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Free cash flow looked good in 2021, 3.6 billion, down 52% to 1.7 billion in 2022. Then they struggled in 2023, negative 1 billion, but that improved a lot. In the trailing 12 months, it's 1.3 billion. Margins are okay, 10%. That means they convert 10% of their revenue into free cash flow. Net income is the profit or loss on the income statement. It's revenue minus expenses. That was 2 billion in 2021. Then a negative in 2022, a really big negative in 2023, but still negative in the trailing 12 months. They have lots of write-downs, lots of impairments. So their income statement looks bad, but their cash flows are okay. They're generating positive cash flow. Revenue is a sales for the company, and that's been going down from 20 billion to 13 billion. But 13 billion is a lot of revenue. Not many companies generate that much revenue. They used to pay a really big dividend, but they cut their dividend since their revenue and cash flow has been coming down. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 8 billion. We discounted those numbers back to today's weighted average cost of capital. We get a value of the company of $7.3 billion. We divide that by 1 billion shares. And we get a calculated stock price of $7.20. They're trading at $9.59, so they're trading at a 33% premium. It's a sell according to the model. This stock was $1 at one point, just a year ago, and it's almost $10 now. We need to get better at tracking these stocks because once it got to $1, we should have bought it. But we'll look at their stock chart in a little bit. I think it was trading really low, like below $3 for a long time. So even if we bought it at $3 or $2, we had to sit on it for a while. And after a few months, you start to lose hope. But we need brass balls. We have to hang in there. There are 38 companies in the same industry as Lumen, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They still spend a lot on CapEx, 2.7 billion. This is the investment in property, plant, and equipment. Most telecom companies spend a ton in CapEx. All the infrastructure, all the cables they have to build. Not only do they have to build it, they have to maintain what they have. Look at AT&T, 18 billion of CapEx. Verizon, 16 billion. T-Mobile is still fairly high at 8 billion. They've always been really leveraged. Debt to equity ratio 55. For every dollar of equity, $55 of debt. They cut their dividend. They used to pay a really high dividend. Now they don't pay any dividend at all. They still generate positive free cash flow, 1.3 billion. AT&T is number 1 at 20 billion. They rank 10th in market cap at 9.7 billion. Their market cap used to be a lot higher. I think the stock was trading at $40 or $50 just in 2019 or 2020. Price to book is really high, the highest on this list, 28. We can't look at their PE, they have negative earnings. The South Korean company SK Telecom is number 1 at 10. They have a really attractive price to free cash flow, 7.5. That means their market cap is 7.5 times their free cash flow. One of the better ones on this list. Vodafone is number 1, below 2. They're trading below revenue, so their market cap is below their revenue. They generate a lot of revenue, 13 billion. They have almost double the revenue of Chunghwa, the South Korean company. And Chunghwa is triple the market cap. That ticker is CHT if you want to invest in that company. The reason the stock is so low is because their 5-year annual revenue growth rate is negative 9%. The best is Liberty Broadband, 133%. They're growing like hotcakes. If you put $10,000 into this company 10 years ago, at one point your $10,000 will be $1,000, but it's coming back up. It would be close to $5,000 today. But if you picked it up within the past year, you're probably up 2, 3, 4, 500%, possibly 8, 900%. So to summarize, I have them trading at a 33% premium, ranking 5 out of 10. I think it could be a really good swing trade. It could easily come back down to $3, $4, $5. But would I buy it? No, because I buy long term. Maybe I should add a second column here. Would I buy short term or would I buy long term? Actually, I think I'm going to do that. Would I buy long term? 2. Would I buy short term? 5 or 6. Ratio 6 out of 10, really attractive price to free cash flow. Financials are getting worse each year, so 3 out of 10. The reason it's not a 1 or 2 is because it's not easy to generate $13 billion of revenue and $1.3 billion of free cash flow. Even though they started at a higher point, that's still a big number to generate in a 1-year time frame. Let's do something a little different. Let's look at a daily price chart. Maybe we could have identified a great entry point, because this stock, we could have made a ton of money. It 10x'd at one point. It was down to around $1. It almost hit 10 the other day. It's so much easier said than done, because I did a lot of videos on this stock when it was trading at 20, at 10, at 5. Even if I told you at this point when it was $4, this is March 2023, and I said I guarantee it's going to be a $10 stock at some point. Say you picked it up at $4. That's in March. And it bottomed out in November, around 8 months later. So you'd be down like 70%. You'd probably be cursing me. And then it goes up, then down, then up, then down. And then it fell back down to $1. This is in July of 2024. So 16, 17 months later, you're down 70, 80%. Not many people wait that long. After a month or two, a lot of people just let go of the stock. It's so much easier looking at it on a chart, but when you're living it day in and day out, it's really not that easy. Not many people would have held this long, but say you did and it got back up to $4. You might have sold here thinking, okay, I just want to break even. Because there were a lot of times I bought a stock at, say, $10, and then it got up to $20, and I didn't sell, and then the stock was trading at $1 or $2 for a long time, and ended up selling at a huge loss. Like, how do you know when to buy or when to sell? Let's try to figure it out. I don't know. So the real big jump was in August. It had a huge surge. Just to explain real quick how candlesticks work. If it's a red candlestick, during that time period, the stock price opened up here, and then it closed down here. These candlesticks are months. This candlestick is the month of March 2023. So March 1st, it opened up at 524. And March 31st, it closed at 298. Then April 1st, it opened up here and closed down here. If it's a green candlestick, that means it opens up at the bottom. So this is the month of August. So it opened up at about $1.72 and it closed August at $4.71. You see this wick right here? I'm going to go to the side, but like right here, there's this long wick. That means it did trade as high as $7.79 mid-month. So at one point it was up to $7.80, but it actually closed the month over here. The body of the candlestick is the opening and closing. When you see a big wick, whether it's top or bottom or both, that means the stock is pretty volatile. So this last candlestick is the month of November, which we're still in. So it started November at $5.72 about, and it almost hit $10 at one point. You're a genius if you bought it 4 or 5 months ago, but you wouldn't know. There'd be no way for you to know it's going to be a huge surge coming up. If you bought it back here and waited like a year for the surge, you're still doing great. You'd need brass balls to sit on it that long and watch it go down. Let's look at Simply Wall Street, because below the chart, they show a lot of information, like other, the orange circles are strategy, the light blue is management, the purple is financial, like when they report earnings, and this one is dividend, the dark green. So let's just look at financial, the purple. So the huge surge was at this point, real recently. Let's click on that circle. This is when they released earnings. Usually when a stock goes up or down a lot, it's usually from earnings release. So they released their third quarter earnings on November 5th, which is just the other day on Tuesday. Revenue of $3.2 billion compared to $3.6 billion. They're pretty much going down each year. They have a big customer base, but it's diminishing. They had a loss of $148 million compared to $78 million last year. So why is the stock going back up when they have losses? The stock market is just supply and demand. Let's pretend there's a supermarket in your hometown, and there's 100 families that live in your area that go to the supermarket. And let's say prime rib is really expensive, $25 a pound. How many people will buy it? That's a little pricey even for prime rib. So maybe only 8 shoppers buy prime rib at that price, because those 8 families love prime rib. Now what if prime rib is down to $20? Then you might see more buyers of prime rib. Maybe it's up to 12 people, because it's still kind of high, but it's a little more affordable. But let's say it's down to $15 a pound, so it's a little more affordable, but it's still a lot more than chicken. So not everybody's going to buy it just because it's down to $15, which is a decent deal for prime rib. So maybe 18 people buy it. But what if the supermarket bought too much prime rib, so they need to get rid of it, so they're willing to sell it at $10 a pound? Now even more people are going to buy prime rib because it looks like a great deal. Because $10 a pound is pretty close to what a pound of roast beef is. Might as well get prime rib. So now maybe 30 people buy it. What if they're doing a big special, $5 for prime rib? It's their 100-year anniversary, so they're doing a big special for the whole town. So anybody that likes prime rib buys it, but not everybody likes prime rib, right? So maybe 50 people buy it. Even at $5, some people are not going to buy prime rib. Some people don't eat meat. They might be vegetarians. Or even $5 is not that cheap for some people. They rather buy pasta. That's much cheaper. It's the same thing with a stock. As it goes down, it becomes more and more attractive. But not everybody will buy the stock. Let's click on this orange circle. That's right before the stock shot up. This is big news. Lumen and Amazon Web Services partner to unlock the power of generative AI through enhanced network operations and delivery. So that could be a big reason the stock went up. Not the fundamentals, but their partnership with AWS. So this looks like the big momentum breaker, the partnership with AWS. Because sometimes the stock goes way up before they make any money, or way down while they're making a lot of money, because of stuff like this. Getting a partnership, the stock just shoots up because investors look towards the future. On the flip side, if you lose a partnership, the stock may go way down, even though you're still making profits. But the stock wasn't that low before this announcement. It was $6.69. The stock went from $1 to $6.69 in a few months. Let's see this orange circle. What do they say? Lumen and Meta partner to drive AI network. Lots of big partnerships. Meta and AWS. Amazon and Meta are both top 10 companies. Top 10 in terms of market cap. While growing interest in AI preparing for the future means investing in a reliable network, the Lumen partnership provides Meta with increased flexibility through secure on-demand bandwidth to support its complex computing needs and serve billions of people every day. So it was trading at $1 as early as July 2024, so only 4 months ago. Let's see the news stories right around $1. That would have been an amazing time to pick it up. Let's click on this circle. Microsoft and Lumen partner to power the future of AI. They're partnering with everybody. They just need to add Google and Nvidia, and they have the biggest companies in the world as partners. Let's see this circle. Lumen and Corning reach supply agreement on next generation fiber optic cable to support data center AI demands. Corning's market cap is $42 billion. Corning's specialties in glass and ceramics. The reason they partner with Lumen is they're in advanced optics, working with industrial and scientific applications. So all these big partnerships should have given us indication to buy the stock. The purple circles are financial news. Let's click on these two purple circles. Okay, this one's providing guidance for year end. They expect to report negative net income, negative 300 million, up to positive 100 million. The reason their net income is usually negative is because of impairments. They have lots of old assets on their balance sheet they need to write down. They took a big impairment of $8.8 billion. So a company can have negative net income, but generate lots of free cash flow because of things like impairments. Let's look at this other orange circle. New Mexico Education Network picks Lumen to connect K through 12 schools. Lumen's going to provide 900 miles of high-speed fiber connectivity to K through 12 schools in this state. By that time, the stock was already up to $464. But it's still doubled from that point. Let's see what this blue circle is back in April. This mentions the appointment of 11 directors to add KPMG as their independent auditor. It looks like they're approving an amendment and restatement for its NOL rights plan. I think that stands for net operating loss. I want to read more about the dividend, which is the green circle, but we have to go back a little while, back to 2022. They don't mention the dividend in 2023 or 2024. The company withdrew their dividend. Previously, they paid $1 per share. So it looks like that's when they eliminated the dividend. Let's go back a little bit to learn about the dividend. It looks like the dividend in the third quarter of 2022 was 25 cents. So they might bring their dividend back now that their stock is going up. When a company's stock price gets higher, that's a better time for the company to issue more shares. When the stock price is real low, the company shouldn't issue more shares. That's a good time for them to buy back stock. Let's take a gander at their third quarter results. It looks like they have been executing their transformation, operational turnaround, improving sales execution, enhancing the customer experience, and reducing churn. Churn is turnover. They've had a ton of churn the past decade. They need to start increasing customers rather than losing customers. They're building their backbone for AI. Big tech chooses Lumen to partner in AI race. Cloudifying telecom, driving NAS, network as a service. Lumen's view 3 phases of the AI story. AI data needs to train its algorithms, to understand your business, to offer insight, to adopt your voice. Data centers in the public cloud, at the edge, on-prem. Prem means on the premises. Either you can have storage on the premises where you work or in the cloud. The benefit of on-premises is it usually runs faster. Data centers need power, space, water for cooling, fiber networks for connection. That's where this company comes in. I thought this company was going to shrivel up and die, but now they're expanding. I totally missed that. I wish I dug a little deeper. Not sure if I still would have bought the stock, but I didn't realize I had these big partnerships. Their revenue for the third quarter was $3.2 billion, business $2.5 billion, consumer mass markets $685 million. Those are both down quite a bit from last year. They really focus on businesses, selling their service to businesses. Revenue for large enterprises $839 million, mid-market $471 million, and public sector, like the government, $427 million. Everything is down, although large enterprise is up 0.2% quarter over quarter. So that gives you some hope. Wholesale, $700 million, down 9%. International is small, only $93 million, down 65%. Let's get a breakdown of the $685 million to mass markets. Fiber is $190 million, other broadband $280 million, voice and other $213 million. So that's total $685 million. Everything is down except fiber. Fiber is up. Fiber was only 32% of their revenue last year. Now it's 40% of their revenue. They have to keep growing fiber. They say fiber is future-proof. I'm not sure because everything seems to get replaced. I'm sure when people had phones in their home, they thought, this is amazing. Nothing can replace this. A lot of our great-grandparents didn't have a phone in their home. They had to leave the house to call someone. In 1890, only 1% of homes had a phone in it. By 1957, 75% of homes had a phone. So 1/4 of homes didn't even have a phone in 1957. Now many homes don't have landlines anymore. I don't have a landline. They have only 1 million fiber subscribers, but that is up 139,000 year over year. They still have 1.5 million other subscribers, people using the old technology. Those are mostly businesses. Hopefully they can keep those customers and transition them to fiber. EBITDA was $1 billion last year, now it's $900 million. And most of that decline was organic, losing their current customers. Third quarter operating cash flow $2 billion, CapEx $850 million. So free cash flow $1.2 billion. Here's their 2024 outlook. EBITDA about $4 billion, free cash flow $1.3 billion, net cash interest $1.2 billion. That's the interest they receive on their investments minus the interest they pay on their debt. They have a lot of debt. The amount of interest they're spending on their debt is almost equal to their free cash flow. They spend a lot in CapEx, $3.2 billion. They have so many write-downs, it looks like they're getting a tax credit of $300 million. So if you want to get really good at reading financial statements, click on the video in the top right corner. Thanks for watching.